Good afternoon. Welcome to the board meeting of the Teachers Retirement Board for December 18th, 2025. I'll start by calling the roll. Brian Berge,
Brian Berge, representing Mayor Adams, present.
Thomas Brown,
Present, Patricia. Good afternoon.
Anthony Giordano,
Tony Giordano, representing PEP Chairman Gregory Faulkner.
John Dorser,
John Dorsey, designee for Controller Brad Lander, present.
Victoria Lee.
Good afternoon, present.
Christina McGrath.
Good afternoon, Patricia, present.
We have a quorum. Next on the agenda is an update on TRS operations. Alita Conroy.
Hi, good afternoon. Regarding our pension verification, TRS recently completed our final pension verification mailing for the year as part of our ongoing efforts to prevent pension fraud. In 2025, we tripled the population of retirees who participated in the annual verification process. Nearly 34,000 retirees were contacted during this year. TDA Roth program, as of this week, 2,160 members have enrolled in the Roth option for our 403B plan, effective January 2026. TRS is in the midst of an email campaign to eligible members to increase awareness of the Roth option and the contribution limits for the 2026 that were recently announced by the IRS. In the new year, TRS plans to report to the board more formally about the Roth option. Tier 6 contribution rates. On January 1st, a new plan year goes into effect for Tier 6 members, which means their contribution rates are subject to change based on past salary and wages. TRS has completed a review of the data, and contribution rates will be adjusted for the affected members in January. Thank you.
Thank you.
Next on the agenda is the executive director's report, and the first item there is the matter of the next meeting. So on Thursday, January 15th, 2026.
We'll so note that.
Please. So next is the resolution for the authorization to the controller of the City of New York to invest certain QPP funds. Resolve.
Please skip to the resolve.
I meant to resolve. Resolve. Wait.
Please waive the reading.
Okay.
Do I hear a motion to move the controller's authorization to invest QPP funds?
So moved.
It's been moved. Is there a second?
Second.
It's been seconded. Is there any discussion or questions regarding this? So we're ready to take a vote. All those in favor of approving the controller's authorization to invest in QPP funds, please say aye. Aye. Opposed, say nay. Abstentions. This resolution has passed. Thank you.
Thank you for your continued support of the Controller's Office.
Thank you, John.
Next is the authorization to the controller of the City of New York to invest certain tax deferred annuity funds. Resolved by the committee.
Do I hear a motion to move the controller's authorization to invest certain TDA funds?
So moved.
It's been moved. Is there a second?
Second.
It's been seconded. So we're voting on now the resolution for the controller's authorization to invest certain TDA funds. Any discussion, questions? Great. All those in favor of this resolution, please say aye. Aye. Opposed, say nay. Abstentions, and this resolution has passed.
Thank you again on behalf of the Controller's Office.
Duly noted. Thank you.
Next is the resolution for attendance at a conference. Resolved that the trustees of the Teachers Retirement Board hereby.
Please waive the reading.
Oh, it's too
Well,
Well, I'm sorry, please skip to the resolve.
Thank you. Resolved that the trustees of the Teachers Retirement Board hereby approve the attendance and participation of the executive director and or her designees and any interested trustee at the National Conference on Public Employee Retirement Systems 2026 Communications and Member Services Summit Conference from March 2nd through the 4th, 2026.
Thank you, Patricia. Is a motion to move this resolution?
So moved.
Great. So we're
Second.
And is there a second?
Second.
And it's been moved, it's been seconded. So we're voting now on the attendance at a conference, the NC PERS 2026 Communications and Member Services Summit. Any questions or discussion regarding this? Great, we're ready to vote on this one. All those in favor of this resolution, please say aye. Aye. Those opposed say nay. Abstentions, and this resolution has passed. Thank you.
Okay, next is the calendar. And the first item on the calendar is the approval of the following minutes. November 6th, 2025 investment meeting minutes, November 20th, 2025 board meeting minutes.
So I'll make a motion to adopt both sets of minutes.
Motion has been received, and is there a second?
Second.
So we're voting on adopting the minutes and approving the minutes for November 6th of 2025, the investment meeting minutes, and at the same time, we'll be voting to accept the board meeting minutes for November 20th of 2025. Any discussion on these two? Any comments?
Chair, I'll be abstaining just because I haven't reviewed.
Okay, thank you. Now the vote to accept those two items, please say aye. Opposed, say nay. Those opposed, record shows one abstention. This, the acceptance of the minutes for both investment meeting and board meeting minutes have been approved. Thank you.
And the next is the calendar items. You all received an electronic version of the calendar.
Please waive the reading of the calendar.
Thank you.
So we need a motion to accept the calendar items for December of 2025. It's been moved. Do I hear a second?
Second.
And it's been seconded. Thank you. Any discussion or questions? Great, so we're voting to accept the calendar items for the month of December 2025. All those in favor say aye. Opposed say nay. Abstentions, and let the record show the calendar items have been approved. Thank you.
Next on the agenda is other business. It's Grant Thornton audit presentation for fiscal year 2025.
Thank you. So good afternoon. I'm Sharon Campbell. I'm a managing director in Grant Thornton's Employee Benefit Plan Audit Practice. And I'm pleased to present to you the results of the 2025 audit. With me today is Will Richardson. Will, if you want to introduce yourself.
Hi, good afternoon, Sharon. Will Richardson here. I'm a director with Grant Thornton's Employee Benefit Plans Audit Practice, working out of the Melville office with Sharon.
Thank you. So Will's going to bring up the presentation. Hopefully everybody has the presentation in front of you. We did have a technology issue with Zoom last week. Hopefully it doesn't recur. If it does, we're going to refer to the slides in the presentation if we can't bring the slides up. Okay, before we start, I do want to express our sincere appreciation to the TRS team for their collaboration, their responsiveness, their transparency in responding to our questions, and their overall commitment to quality financial reporting. All right, so with that, we're going to move into the presentation and our required communications.
Can everybody see the screen?
Yes.
Yes,
I can.
we can as well.
All right, so this is our engagement team. It hasn't changed significantly from the prior year, so we're just going to skip over that. We have also other members of the engagement team, but these are the managers. Okay. All right, so we issued our opinion on the standalone financial statements on October 29, 2025. It was a clean, unmodified opinion. Significant risks, which Will is going to go into in a little bit, were management override of internal controls, which is inherent in all audits, and the valuation of alternative investments. Okay, this is our audit timeline. We began our audit procedures this year in April and May, where we went through our independence responsibilities and had our kickoff communications. In May and June, we performed our planning and preliminary risk assessment procedures, including materiality determination, sharing of the PBC list, and identifying significant risks. And then July through October, we performed our field work with the deliverable date again of October 29, 2025, where we issued our report, communicated any identified misstatements and any internal control matters. Okay, with that, I'm going to pass it to Will, who's going to go over the significant risks.
Thank you, Sharon. As Sharon mentioned, we had two significant risks this year, which were similar to prior years. The first being management override of internal controls, which is defined as the risk of management manipulating the financial reporting process by recording inappropriate or unauthorized journal entries or making adjustments to amounts reported in the financial statements, omitting, obscuring, or otherwise misstating disclosures by manipulating the financial reporting process, intentional management bias in making accounting estimates, or significant unusual transactions to engage in fraudulent financial reporting or conceal misappropriation of assets. Some of the audit procedures we performed to target this risk was evaluating the design and implementation of entity-level controls, including information technology controls, which we'll discuss on a later slide, designed to prevent and detect fraud. We obtained an understanding of financial reporting process and controls over journal entries and other adjustments, including the suitability of design and implementation. We made inquiries of individuals involved in the financial reporting process about inappropriate or unusual activity relating to the process of journal entries and other adjustments. We also considered any fraud risk indicators, nature and complexity of documents, of accounts, and entries processed outside the normal course of the operations. Using our whole ledger analytics, WLA, which we'll discuss on a later slide, technology, we performed certain risk assessments for journal entries impacting the financial reporting process, and we made a selection of journal entries for testing for approval and appropriateness. We're happy to report that there were no significant exceptions noted in this area. Okay, moving on to the second significant risk in the area of investments, in particular the alternative investments. The system's alternative investments consists of certain funds with non-coterminous year ends. Most of the investee funds have accounting period of December 31st, while the system has the financial reporting period of June 30th. And because of this difference, there's a potential risk of fair value adjustments that may call into question the appropriate application of fair value, including the application of fair value. So as I mentioned before, this is a significant risk that we've seen in prior years. And as a result of this year's audit, we had one uncorrected audit adjustment in this area. Management has represented that the effects of the uncorrected adjustment was immaterial, both individually and in the aggregate, in consideration to the combining financial statements as a whole. Other than that one adjustment, unrecorded adjustment, there were no exceptions noted in the area of investments. Okay, I'll just take a quick pause to see if there are any questions.
Any questions for Will? Okay, we're good.
Thank you. Moving to the next area here. So these next couple of slides discuss our areas of audit focus. First one here being investments and investment income. Some of the targeted procedures included confirming investment positions with the custodian investments, evaluating the reasonableness of fair value disclosures, testing a sample of investments at year end to determine the reasonableness of the reported fair values, testing a sample of investment purchases, investment sales transactions during the year, testing the reasonableness of investment income, including net appreciation or depreciation and the fair value of investments, and evaluating the reasonableness of investment expenses. The only adjustment we had was the previously mentioned adjustment related to the alternative investments. Next area of audit focus would be employer contributions. Some of our procedures included evaluating the skills of the individuals who oversee the process for capturing the contribution information and the controls over the calculation of employer contributions. We also tested the completeness of employer contributions by tracing selection of deposits to the bank statements. No significant exceptions noted in the area of employer contributions. Okay, moving on. Next area of audit focus is benefit payments. Some of our procedures included testing the completeness of the population of benefit payments by tracing the amounts to the amounts recorded in the general ledger. We also selected a sample of benefit payments and reviewed the documentation and support to determine whether the benefit payment, whether the member was eligible for the benefit payments, whether the payments were appropriately authorized, and whether the payments were calculated in the correct amount in accordance with the plan terms. There were no significant exceptions noted in the area of benefit payments. Okay, the last major area of audit focus here is the total pension liability. So with the help of our internal actuary team, which we'll discuss on a later slide, we tested the completeness and accuracy of the census data. We assessed the reasonableness of actuarial assumptions and inputs used in the calculation of the pension liability. We also selected a sample of members included in the census data that we received from the Office of the Actuary and tested the completeness and accuracy of certain demographic data for the members. There were no significant exceptions noted in the area's total pension liability. A couple of other areas of audit focus includes member contributions, member loans, and information technology general controls, which we'll discuss on a following slide. Okay, just a quick pause here to see if we have any questions.
Any questions for Will or Sharon? Great. Okay, we're good.
All right, thanks, team. Moving on, the next slide here talks about the whole ledger analytics. So as I mentioned, this is some technology that we use here on our side to assist us with the testing of journal entries. I'm not going to go into all the details here, but basically we feed it the general ledger from the system, and it performs an analysis and picks out some of the higher risk, potentially higher risk journal entries. As I mentioned before, there were no exceptions noted in the areas of journal entries testing. Okay, next slide here talks about the Information Technology General Controls, or ITGCs. This slide here basically summarizes the systems that were in scope for this year's audit, which were similar to the prior years. And it also summarizes some of the areas of audit focus. Okay, next, Sharon's going to talk to you about the results of the basic financial statements audit.
Thank you, Will. So as mentioned earlier, we issued a clean, unmodified opinion. There were no scope limitations. We had open and effective communication with management, and any internal controls and best practice recommendations were discussed with management. We expect to issue our opinion for the remaining schedules that'll be included in the ACFR. We expect to issue that opinion by tomorrow. The ACFR will include the GFOA Certificate of Achievement for the 2024 ACFR. All right, so as Will mentioned before, we did have an audit adjustment similar to every year that we have this. We're required to accumulate and communicate financial statement misstatements, which may be factual, judgmental, or projected, that are identified during the audit that are greater than a clearly trivial amount. The management representation letter included the details of the unrecorded misstatement. Again, it was more specifically related to the lag for the alternative investment fair value. Management believes that the effects of the uncorrected misstatements are immaterial individually and in the aggregate to the financial statements as a whole. Okay, moving on. So we have other required communications. I'm not going to go over every bullet point here. I'm just going to hit on some of the salient points. We were not made aware of any identified or suspected fraud or non-compliance with laws or regulations. Pleased to report we had no significant difficulties that were encountered during the audit. We were not made aware of, nor did we identify any material weaknesses or significant deficiencies that would be required to be communicated. Again, no difficult or contentious matters for which we consulted. The audit adjustments were communicated with management, and there were no disagreements with management. Okay, next slide. All right, so I'm also required to communicate accounting policies. The system's significant accounting policies are detailed in the notes to the basic financial statements. They are considered appropriate in all material respects and consistent with the prior year. The largest or most significant accounting estimates include fair value of investments and the total pension liability, as well as the related disclosures associated with that. And we have assessed the financial statements and disclosures for clarity and completeness, but note disclosures appear to be informative, consistent, and clear. Okay, we've gone over this slide. This is the same slide presented for the past few years, so I'm not going to go into detail here, but this goes over our robust independence process and monitoring. Okay, next slide. So we did use certain audit innovations, certain audit tools, as Will mentioned earlier. We used whole ledger analytics. This slide just delineates the different tools that we use from an innovation perspective. All right, as Will mentioned, for the total pension liability, we use our Wealth and Employer Solutions team, which is comprised of our actuaries. They review of the reasonableness of the actuarial assumptions and methods that are used to determine the total pension liability. We also use the New York Pricing Group to assist us with investment valuation of the level one investments. We use Galeros Robinson as a subcontractor. And both Will and I are out of the New York office. We do have personnel who work on this engagement who are out of our Island, New Jersey office, our Boston office, and our Hartford office. We also use personnel and technology and resources of Grant Thornton Advisors, LLC, as well as technology and resources of our Shared Services Center located in India. Copy of the management representation letter was provided to the appropriate members of management for review prior to the financial statement issuance. This goes over our monitoring the system of quality management. I'm not going to go in detail in this slide as well. We can skip. That pretty much concludes our presentation. Does anyone have any questions?
Thank you. Does anyone have any questions for Sharon or Will? Thank you. Thank you for your report. Much appreciated. Happy holidays to you.
Thank you. Happy holidays to you as well.
Thank you, everyone. Bye-bye.
Thanks, everyone. Bye.
Great. So that brings us to the conclusion of our public session. And before we take a motion to adjourn, I'd just like to thank publicly on record our Janice, our TRS tech. Thank you for your work.
Thank you.
And we thank Will, as always, for being our reporter. At this time, I see a picture of her up on the screen, a still picture. We'd like to thank Liz Sanchez, who usually works behind the scenes here, but it is because of Liz's hard work and dedication to her job that these meetings run so well and so smoothly. So Liz, the trustees, thank you for all that you do for us throughout the year. I'd also like to thank at this time, since it's our last meeting of 2025, I'd like to thank TRS. I'd like to thank our executive director, Patricia Riley, our deputy executive director, Thad McTeague, and all the associates and the entire TRS team for helping our members, for giving the top quality service that you do to our members. You go above and beyond. You get wonderful reviews from our members. People love TRS. They're connected with TRS. And they love TRS. We thank you. We thank you for your dedication. And all, I could mention all the team members, but this goes out to everybody. A heartfelt thank you on behalf of all of the 225,000 in service and retirees, and on behalf of the teacher members and the rest of the trustees. Thank you so much. The rollout of the new Roth went extremely well. As you know, since the middle of November, our members were able to enroll in the new Roth. Kavita told you how many people already enroll. As fiduciaries, it's the prudent thing to give our members a choice. So now we have two voluntary programs in addition to the defined benefit plan, the traditional tax deferred annuity, and now this Roth option, which eventually, between those two and the defined benefit, will benefit financially to all our members who have put in a career teaching the children of New York City, or some of the members at least who helped to teach the children of New York City a financially secure future, which is what it's all about. And with that, I want to wish everybody a happy holiday season, joyous season, a healthy new year, and we'll see you back on the 5th for the investment meeting, and then soon after for the board meeting. On the 8th? Oh, on the 8th, January 8th. You got it. Thank you for the correction. And it is a pleasure. It is a pleasure coming to board meetings here at TRS. And I just want to thank you for that. And with that, happy holidays. And do I hear anyone else have anything to say before we adjourn?
No, happy holidays.
Thank you, John. Thank you. And to everyone, a joyous holiday season. And with that, do I hear a motion to adjourn? So moved. I hear a motion. And is there a second?
Second.
Any discussion or questions? Great. The vote will now take place. All those in favor of adjourning our last meeting of 2025, which is hard. I still remember Y2K, which seemed like a year or two ago. But now it's 2025. We survived Y2K. All those in favor of adjourning our last board meeting of 2025, please say aye. Aye. Opposed, say nay. Abstentions. We are adjourned. Everybody.
So.